Good morning, good afternoon, and good evening, depending on where you are. My name is John Kiff, or Kiffmeister for short. That's what you'll see me called when you're on social media. And I'm the research director at the Sovereign Official Digital Association, or SODA for short. It's a great pleasure for me to welcome all of you to the second edition of the DC3 conference, from cryptocurrencies to CBDCs. It's organized by the International Telecommunications Union, or ITU for short, in collaboration with the Future of Digital Currency Initiative of Stanford University as part of the activities of the Digital Currency Global Initiative. The DC3 was set up in 2020 following the conclusion of the ITU-T focus group on digital currency, including digital fiat currency. The DC3 conference aims to highlight the work of the DC3 with a spotlight on emerging trends, innovations, technical standards, and initiatives shaping the future of digital currencies and financial inclusion. There are three working groups established by the ITU under the DC3. The working groups are policy and governance, architecture, interoperability and use cases, and security and insurance. The work on offline transaction, which is the topic for today, is being discussed in the CBDC work stream in the architecture working group that I lead, and I lead that CBDC work stream under the DC3, and all the panelists you can hear today are part of that effort. Before I invite the panelists for their remarks, I'd like to inform the audience that they can put their questions in the Q&A window, but it's probably preferable to use the Pigeonhole facility. You'll see the link to that in the comments, in the comment box. And that's a more efficient way of asking questions. So you can upvote questions that you like and so on. It'll help me to choose the relevant questions to ask the panelists after they're finished. So in order of intervention of the panelists, we have, first of all, Lars Hupel, who's the chief CBDC evangelist at GND. We got Razvan Dragomirescu, he's the CEO of WhisperCash. Joachim Samuelsson, CEO of Crunchfish. Jerome, Ajdenbaum, he's the vice president of cryptocurrencies and digital currencies at Idemia. And these are all major players in the offline CBDC space. So we're going to lead off with Lars. Lars, take it away.
Thank you. I will just briefly share my screen now. And thank you very much for the introduction. And I'm very happy to be talking or be giving a quick introduction into GND in terms of offline payment. Now, I work for a company called DC3 in Devrient. And if you were a commercial bank or a central bank, you will have heard of DC3 in Devrient. But if you haven't, I will just tell you a bit what our company is about. We have four major playing fields, and what I think we are most commonly known for is a public currency, in the sense that GND has multiple divisions that take care of banknote printing or currency management systems. So, for example, managing cash centers and actual machines to count cash and so on. But we also have other fields. So we are also active in e-payments. We are active in connectivity, for example, for Internet of Things, and also identities and digital infrastructures. But I don't want to bore you with all of the details here. Instead, I would like to move on to the topic of today's panel, which is offline payment and financial inclusion. Now, we have a CBDC product, a CBDC solution that is called GND. And we see that financial inclusion is a key design challenge for CBDC. And this is why we also tried very hard to incorporate aspects of financial inclusion into our product. So whenever you have a central bank issued currency, you cannot rely on multiple things. For example, you cannot rely on users to own or have access to high-end smartphones. We also have seen around the world that in many countries there's good 3G and 4G coverage, but in terms of 3G and 4G subscribers, it's not looking so good. So even though there might be technically speaking, access to those kinds of networks, people might not be using it for cost reasons, for example. You can also not rely on users to be tech savvy or well educated. So this is what's so great about cash. It's that any child can use cash. It's very easy to explain how cash works. And every time you introduce electronic payments or a novel means of payment, then you have to compete with cash in terms of how well you can explain it and how easy it is to use. Furthermore, you also cannot rely on merchants to have access to high-end terminal devices. So that does not just apply to emerging economies, it also applies to developed economies. So in many countries, merchants routinely just have QR codes somewhere on their walls, and then you scan that QR code somehow. And well, that's very low end, right? It's very low tech, just a piece of paper with a QR code on it. So this is also introducing CBDC will also have to compete with that kind of payment methods. And finally, users to have stable access to internet connectivity. You also cannot rely on that. Now, I've seen already in the chat, many of you are from a quite diverse range of countries. I'm sitting here in Munich, Germany, and we really have problems with stable access to internet connectivity. So when I'm in shopping in stores in Munich, it's not guaranteed that I have internet access, even though you would think that Germany as a developed country has that, but it's not the case. So as a conclusion, if we want to have a truly inclusive CBDC, we have to offer wallets for un or underbanked people. It needs to be simple and intuitive. It needs to be low cost. So we cannot just expect to charge merchants or users high amounts of money for those devices. And also we believe that offline payment functionality is paramount. Now, these use cases for those payment devices, and that includes wallets and merchant terminals and so on, they need to be tailored to users' needs. And here's just a few sample use cases. Those use cases differ widely across countries. So we see, for example, in emerging economies that the use cases are more about simple payments. So I have money, I want to give that money to someone else, and then that other person will render some goods or services. And in developed economies, these type of payments are already solved. There's already so many ways to make retail payments. So there, we're really looking for more innovative use cases to actually provide some additional value. So these kinds of use cases that you see here, they are really just examples of what you could be doing in terms of retail payments. And maybe finally, and then I'll close this presentation. In our solution, we have tried to integrate on and offline payment scenarios as much as possible. So everything follows the same protocol, no matter whether you're online or offline. And based on that same protocol, we can enable different types of payment functionalities, including, which is the topic of this panel discussion, consecutive offline payments. Now, for those consecutive offline payments, you don't need to have a smartphone or anything else. You can also be using a wide variety of different other devices. So you see on this slide, for example, smart cards, so these typical credit card type of things, or even wearable devices. We also have this key fob, which supports biometric authentication. So you can use your fingerprint in order to actually authenticate the payment. But we also have features to actually store the CBDC inside smartphones. So that is also completely possible. And we believe that this wide range of wallet types and of payment facilities is actually needed to have a truly inclusive CBDC where everyone can access it, no matter no matter where they're coming from, no matter whether they're living in a rural area with no internet access or in metropolitan areas with internet access. And all of these devices will be able to talk to each other in order to give you seamless payment experiences. And with that, I would hand over to the next panelist.
Thanks, Lars. Over to you, Razvan.
Good morning, everyone. My name is Razvan Dragomirescu. I'm the CTO of WhisperCash. We are a small technology startup based in Bucharest, Romania. And our focus is offline payments in the context of CBDC, but not only, we're also looking into stable coins and others. Let me just project my screen. Okay. Okay, so we've started about 3 years ago by looking at ways to send and receive payments when internet connections are unavailable. We wanted to design a solution that allowed people to manually transfer payments. We started with by looking at existing systems that were used for remittances, such as Western Union and MoneyGram. And we realized that, the lowest common denominator, something that people in the developing world and everywhere around the world understand, are basically numeric codes that can be used to transfer value. And as you know, when you send money with Western Union, you are assigned a numeric code that you have to relay to the other person, to the payee, and they go to a Western Union agent. They write down the number and the details of the sender, the amount that they're supposed to receive, and the payment happens that way. And that has worked just fine for decades. It's still in use. And we thought, can we do this? Can we do the exact same thing? Just do it offline without requiring a connection to the internet. So allow people to pay each other either in a P2P fashion or P2B fashion and so on, just by relaying these 10-digit codes. And we came up with hold on. Okay. So we came up with a few wallets. We have 3 reference form factors, as we call them. So the solution itself is based on Java card and works on a variety of secure elements. But we've settled on 3 types of end user wallets or terminals. The first one is what we call the WhisperCash Pro, which is a standard size credit card with a screen and a keyboard. And this one is completely self-contained. You use it to initiate a payment. You also use it to accept a payment. It's a battery-powered card, but it's very low power. The battery lasts for about 2 weeks. And we also have the WhisperCash Basic, which is a sticker that goes on top of your SIM card inside your GSM phone. It's based on a very, very old standard from 1999 called SIM Toolkit, but it's still in use today. The upside of this is that WhisperCash Basic works in just about any phone manufactured in the last 24 years. So that works wonders for financial inclusion, because if people have a phone, any phone really made after 1999, they can use WhisperCash Basic, and they can generate and accept these 10-digit codes that convert to money inside their phone. And we also have the WhisperCash Lite, which is a standard contactless NFC keyring tag, and that is the only one that, in our system, that's the only one that requires a smartphone or a terminal that has NFC or contactless to do tap to pay kind of payments. The other 2, so WhisperCash Pro, as I've said, is completely self-contained. It's just the size of a card. It gets into your wallet, and anytime that you want to pay someone, you turn it on. You type in the ID of the person, the 16-digit ID. It's the same as a credit card number, 16-digit ID of the person they're trying to pay. And on the screen, you see a 10-digit code, and you have to relay that 10-digit code to the other person. And we do not mandate any way of doing that. We do not require two-way communication or high-speed network between the payer and the payee. All you need to do is somehow relay that 10-digit code to the other person. And that can be as simple as calling them and giving them that 10-digit code. You can write it on a piece of paper and essentially mail it to them, or it can be an in-person type of transaction where you just read the code to the other person and they type it into their card. Finally, we have these stationary wallets. We call them WhisperCash Vault, which are stickers or NFC-based stickers that are used as storage for digital currency. So it's not just money that you keep. We actually don't advise people to keep their life savings in their day-to-day WhisperCash wallet. So WhisperCash Vault is essentially a way to store some of your digital money offline. These are tiny stickers that attach to everyday objects, and you can deposit money onto them, or you can withdraw money from them without, again, completely offline. They can be inside your house somewhere. So instead of having like this big metal safe where you keep your cash, This can be attached to like a book or a shelf or something. You can put it anywhere you want. And also, we've designed a series of industrial or M2M wallets, some of them for machine-to-machine payments or IoT use. For instance, we've ported WhisperCash to the SE051P chip from NXP. That's a I2C interface, and it can be integrated into IoT objects, allowing them to store money and to also disburse digital cash. And the WhisperCash Basic, the sticker that goes on top of your SIM card, can also be used in products that use GSM or 3G or 4G communication. So anything that has a SIM card inside can become a wallet. It can send and receive payments just by having some way to send and receive 10 digits to and from the terminal. And of course, these are the, so I'll just briefly go through this. We support face-to-face payments, and that's the most common use case. Again, the sender generates a 10-digit code. The receiver enters it into his or her device, whether it be, so this is the WhisperCash Pro, this is WhisperCash Basic, a very cheap phone with WhisperCash Basic inside. And I can just briefly go through that. So you can see that the menu on the WhisperCash Basic side is really, really basic. It's just text and scrolling through lines of text, but it's the lowest common denominator. So this thing works in any phone made in the past 24 years. Let's show you that. So the same, so the sender, the phone has generated the 10-digit code, and you see it entered in the receiver, on the receiver side, on the card. To complete the payment, enter the amount, and then the 10-digit code that the other side is generated. Again, this is a pretty long video, so I'll just probably just skip that. So the money was transferred from the WhisperCash Basic that's sitting inside this phone to the WhisperCash Pro card just by relaying that 10-digit code that the phone has generated. And finally, we support tap to pay as well. This is with the cards, so either the WhisperCash Pro card or the WhisperCash Lite, the keychain token. Both of them support tap to pay contactless payments. In the case of the Pro card, we also display a receipt or an electronic receipt on the screen of the phone when a payment is done. And finally, we also support remote payments. This is quite novel. So offline doesn't really mean that you are completely disconnected from the world. It may just mean that you have very limited communication capabilities, whether you can still make a phone call, you can mail someone a piece of paper, or you have access to a satellite in most parts of the world. And given that our payments are just 10-digit codes that can be essentially compressed into 5 bytes, you can use very low bandwidth, narrow band, or one-way communication over satellites. And here you can see the Garmin InReach Mini using the Iridium network. So anything that can send or receive 10 digits is good enough to execute a payment. And as you probably know, there's this recent movement towards direct satellite to cellular. So iPhone 14 already supports direct communication using the Globalstar network. There's this partnership between Qualcomm and Iridium for the Snapdragon satellite chip, and also a bunch of others like SpaceX and T-Mobile and Bullet and Skylo. So a lot of manufacturers are now looking into integrating satellite communication into their smartphones or phones in general. And we will support that from day one. So anything that, if they can send a 10-digit code, they can execute a payment over that particular medium. And I think that's about it from my side.
Thanks, Razvan. So now over to you, Joachim.
Yes. Good morning, everybody. It's great to be here. Crunchfish vision is to have people and technology in some perfect harmony. We really believe in a world where technology serves humanity to make everyday life easier. And we are a deep tech company pioneering many areas. We are in the area of digital payments, but as well as computer vision. We really believe that it's easy that technology dictates how the limits, what it should be for us humans, but it really should be the other way around. We have to start with the design goals, what is best for us humans, and then we create the technology afterwards. I've seen, and I think there are huge mistakes when it comes to CBDC, of how that is set up, which in my opinion, haven't started with the design goals, but instead have actually started with some technology choices that limits the solution going forward. Our product is Crunchfish Digital Cash, and it's actually inspired by the inclusive, resilient, and private design philosophies that was developed by US Defense Advanced Research Projects Agency, DARPA, in the 1970s. Now we go way back. And it has since, as everybody probably will know, become the basis of the internet as we know it today. It's an incredible, robust protocol, and it's based on packet switching. And what I believe really Crunchfish Digital Cash deliver is for payments what internet is for information sharing. That is that we provide survivability in the face of any temporary failures. Payments is a public good, but for some reason, we haven't developed the systems if it comes to closed-loop wallets or real-time payment systems, and now we're entering to the area of CBDCs that have that appropriate resilience. We've designed the payment system for the happy flow, and that is simply not good enough. A public good in any society, like internet, electricity, or telecom, it has to be carefully designed to continue working despite any temporary outages that you could have of the service. And digital payment, it needs to have that. We're going to talk about that. Financial inclusive, it needs to be inclusive, but also resilience. That's what we need offline for. But it also needs to offer privacy, just as physical cash as we use today, not in a compromised way, but as private as cash is today. I believe that the central bank should demand that all closed-loop wallets and real-time payment system in their country must fulfill these design criteria, or otherwise they're not allowed to operate. The central banks, they really have a chance now to take it upon themselves to establish these design goals for their own implementation of CBDC. And I believe that our platform here delivers on all these design goals of the internet, and is designed to augment any payment service with these properties. How are we going about this really then? And I believe it's sort of that offline is a word which is thrown around, but it lacks practical understanding of how to do it. There are many different types of offline solutions. And last week, we did together with Lipis advisors in Berlin, a white paper on practical guidelines for offline. And I think one of the main takeaways, and we discussed it also on the Friday after here, a week ago, the main takeaway is really that you have to build a system which has inclusion, it has resilience and privacy, and a main takeaway of the paper being that we have provided the whole industry with a map of how to categorize offline payments. At the top, there is the online payment rail. It could be token-based, but it can also be account-based. All real-time payment systems are account-based, and all crypto systems are token-based. The central banks have a choice. My preference would be to go account-based. Then you don't have to basically implement any sort of new money formats in the back end. So I think the whole conference from cryptocurrency to CBDC almost sort of leads that we are sort of starting with that. I do think there is something though in the crypto world which is very useful, and that is when we get into the design of offline system. They have a concept of layer 1, layer 2, and that is native. Do you have a security protocol which is native to the underlying scheme, or is it non-native? That is the first design choice that you have to do. What is the security protocol of the offline system? It could be like Lars was saying, it's the same sort of system on online as offline. Then it becomes it's native, but it can also be non-native. And then you are sort of doing an exchange, just like you take out cash today from digital money. That's a non-native system. Going down to the third level, here, how is the application catered for? What is the security around it? A trusted environment is needed. And you can either have it in hardware, as we've heard here, both from Lars and so Razvan is very hardware oriented. But I believe the main bearer for any CBDC system will be the smartphone. And there, in order to get scalability, interoperability, you have to have it in software. So software is key, I believe, for to implement the security sort of environment here. So basically, I think I'm gonna end with that I really believe that Crunchfish Digital Cash has delivered a solution here, which has both native layer 1 solutions, as well as non-native layer 2 tokens to deliver on any sort of need. And yeah, quite frankly, Crunchfish Digital Cash is for payments what the internet was, or really is still today, for information sharing. We are basically the internet of payments. That's what we deliver with Crunchfish Digital Cash. Thank you.
Thanks, Joachim. And I would also recommend that people interested in offline payments read that paper. It's a really nice paper that sort of organizes thoughts around the space, almost a taxonomy of offline payments, which is something that's near and dear to my heart. So perhaps you or I could put the link to that paper in the chat box. That'd be great. All right. So now over to you, Jerome.
Thank you, John. And it's hard to go last after all this great presentation. I will try not to mention things that have already been mentioned. And okay, let's get started. Just running my chrono to stay on time. Just a word about Idemia. Maybe you are not familiar with Idemia. So you have a few figures on that side. We're a big company. I will present it in a different way. We are mostly quite present in your life. Your identity documents, your driving license, your passport, your ID card maybe comes from us. When you register with TSA Pre in the US, you register with us because we operate it on behalf of the federal government. When it comes to the enterprise world, your payment card, your SIM card, your transit card, all these devices, there is a very likely chance that it comes from us. So we are already involved in offline transaction, in offline payments. It's not something new to us, and we deliver millions, if not billions, of these devices every year. In terms of offline CBDC, our positioning is that we offer a layer, an offline layer, we call it a layer 2, either directly to central banks to work when they develop their own CBDC solution. We are working with the majority of the top five central banks in the world. And we also work with software providers because in many cases, you have a software provider that offers an online CBDC solution, and we work with them in partnership to bring this offline layer, which is quite specific. So we've announced some partnerships, the most recent one being Bit, but there are others and others coming. Of course, we are working with almost every company in the field. We are the provider of the offline layer for this solution. So our solution is agnostic. It works with any central bank ledger. It can be decentralized or centralized, account-based or token-based. Our layer is agnostic. What is important when it comes to digital cash? You will want to replace cash. And cash is working well today. It's a good solution. Not many people complain with cash. It works offline, of course. You can give it to whomever you want. You can retransfer it anytime, any number of times. So of course, from a policy perspective, it's not great in terms of AML and CFT, but cash works. It's quite secure. If we want to replace cash, and we will have to do that, we will have to convince users to start using digital cash. So we need to be as good as cash and even better. So this is one of the motivations for offline, because if you tell your customers when you don't have a network connection, you cannot pay, that's really a big disadvantage. So here are a few considerations about offline CBDC. Our tagline is anywhere, anytime, and for everyone. Anywhere, anytime means if you have a network outage, if you are in a network dead zone, if there is a cyber attack, a war, any unfortunate event, you want to be able to continue to pay offline, anywhere, anytime. For everyone, it's a little bit different, and I won't expand too much on that because I think my colleagues already mentioned that. Smartphones are great, of course. If you can pay with a smartphone, it's a great way to pay, but everyone does not have access to a smartphone because they cannot afford it or because they don't have the tech literacy to use it. So our solution works with smartphones, of course, but it also works with a variety of other devices. I think Lars showed them, so I won't come back to that. Plastic cards, biometric cards, wearables, and even machine to machine. My car maybe will want to pay for the parking machine to machine. So we need to be agnostic of the form factor. The immediate finality is really important. I pay you immediately. Right now, you have the money, and there is no chargeback. You know that you are paid, and you have the money. And more than that, sorry, you can retransfer this money immediately. I pay you, you can pay somebody else right now, instantly. And there is no limit to the number of retransfer. A pays B, B pays C, C pays D, etc. Well, no limit unless you want to set up a limit. Why would you want to do that? Because sometimes it's good for security, for AML, for any other reason. It's good to check that everything is going well. So we have some complex mechanisms with triggers to decide how often you go online, but sometimes you will need to go online. You have the possibility to go online. Technically, it's possible to never go online, even if we don't recommend it. You have the possibility to stay offline all the time. Privacy, I'm sure we'll discuss again. Privacy is very important. There was this ECB study that showed that privacy is the #1 topic raised by citizens. So privacy needs to be controlled. But depending on the country you are talking to, they don't have the same approach to privacy. Some will want something totally anonymous. Some will want something totally traceable. And some will want something in between. So our solution takes this into account with a variety. Again, you can set up level of privacy of the system depending on your needs. And when I say you, and we are working in a two-tier model. So if you are not familiar, you have a central bank at the top who creates the CBDC, who creates the currency, who has the liability, and then you have the commercial banks who are distributing it. And all these parameters where I was mentioning, they can be set up by you. They can be set up at 2 levels, at the central bank level and at the commercial bank level. I take a very simple example. The central bank says the maximum amount of CBDC you can hold is 1,000. That's the low. Then the commercial bank can say, okay, this customer, he can hold 1,000. Or maybe this customer, I would really prefer he only has 500 maximum balance. Of course, they cannot do more because it's not allowed by the central bank, but they can do less. And this is true for all the parameters that can be set either at the central bank level, at the tier 1, or at the tier 2. Security, of course, is paramount, and I think we'll need to discuss that, but I will accelerate because I'm running out of time. And programmability, we didn't discuss programmability a lot. Programmability is very important. I was mentioning that we need to be as good as cash and even better, and programmability is a way to be better than cash. And I will stop here. Thank you.
Thanks, Jerome. Now we're going to go into the Q&A session. So I'm going to go to the pigeonhole and pick the most upvoted question here and throw it out to the panelists. How important is it for an offline CBDC device to connect to the central system for reconciliation to counter counterfeit and double spending? I'll throw it out. I'll start with Joachim. What do you think of that question? You're on mute. Joachim, you're on mute.
Yeah. I'm very sorry. Double spending needs to be counted already offline. That's the whole key point of it. We're talking offline here, and we can't just rely on that we are waiting, like in a crypto system, that you are reconciling this with the backend. Of course, you have the backend as well to protect for, so you will check it there also. But the key thing, the new thing with offline payments is that you have to take care of double spending already in an offline mode.
Anybody else would like to jump in on that one?
Yeah, I can try to add something to that. So GND started out as a security printing company, right? So the entire premise of that division of GND is how to print cash in a way that it cannot be cloned easily, right? So the problem is that in the physical world, it is very hard to clone objects. In a digital world, it is very easy to clone data, right? So this is what the entire idea of the internet is about, to copy data from A to B. So I agree with Joachim that in the offline world, where you do not have connectivity to check if something has been spent already, it's very important to prevent that from happening. And the way we see this is that it is not possible to have 100% security against counterfeiting. It just like in cash, if you expend many resources, it might be possible to create a clone of a piece of cash that someone will accept. But what we can do is we can make it so expensive to counterfeit CBDC that it will not be economically viable. And the key to that is to use secure elements. Secure elements are a technology that it's not new. It's a proven technology, and there is no way to easily extract or clone information that is stored on a secure element. So I've been told that in the basement of the GND office in Munich, there's like a giant lab with lasers and stuff where they try to like poke holes at those secure elements and try to extract data, and they have not been successful. And we see that as key to ensuring that counterfeiting does not even happen in the first place. So having said that, I mentioned that it is not completely impossible, so you will never have 100% security nowhere in life, which is why we also say, and that I think is similar to what Jerome said, to have some kind of limitation, kind of like an artificial limitation, if you want, on offline spendability. And that depends on the risk appetite in a particular country. That depends on the risk appetite from the regulators, from the central banks, from the issuing banks, and so on, where they would say, you know, we would like to limit circulation, offline circulation to, I don't know, like 2 weeks. And then you have to go online. And that can, of course, be to monitor transactions for AML purpose, but it can also be to have act like as the second line of defense against counterfeiting, no matter how improbable it is.
Can I comment there, Jon?
Lars.
Can I?
Yeah, sure.
It's okay, jump in. I think that there is there's an important distinction here, but we're talking about digital cash. We have cash already. A lot of central banks are very used to the cash, you know, and as Lars was saying, GND provides technology to print that sort of cash. And one way to go about it, which I think is the route that most central banks are on, is to think of digital cash as basically a digital representation of the paper note token, which is a banknote. You digitize the banknote. However, there are two words in digital cash. There is digital as well. And we already have digital money. We've had it for, I don't know, 50 years at least. And this is the digital money that our commercial banks have there. And what I believe is the better way to go about this whole thing is to start from digital money and let it behave in a cash-like manner. So instead of digitizing cash, you start with digital money and letting it behave in a cash-like manner. And in this way, we can get so much more interoperability with the digital money of today. We're going to get sort of scalability. We're going to get privacy almost for free as well, because we're not going to take down the centrally issued tokens down to an offline world. We do a non-native layer 2 token representation instead. So we take down a balance representation, and we transact in a non-native way outside it. And that's how cash works. If you think of it, you go to an ATM machine, you have digital money, and you take out some money. So you take it out in another scheme. You get it as cash, physical cash. You transact outside the chain, if this is sort of crypto, or outside the general ledger, and then you put it back again. That sort of nature, I think, is absolutely key for an offline system to have in order to get that resilience, to get that privacy, and to there's so many advantages of actually not starting with cash, making that digital, but rather start with digital money and make it behave in a cash-like manner. So we want that ease of use, we want that privacy, and we want that resilience so it can work offline. That's the better design. But I believe that 90% of the central banks, they're on the wrong track. They think they're going to do a digital token, which I think, well, be my guest and try to do that in an offline mode. You will have a hard time, because if you break that system, you break it system-wide. If you break a non-native layer 2 system, you break it for one wallet. So you get a much higher security in such a system. You only break a fraudster on a wallet instead of breaking the entire system. It's a huge difference of security aspect for if you do it sort of, I would say, in a proper way.
Thanks, Joachim. Razvan or Jerome, do you want to jump in?
Yeah, just one thing, I 5 seconds. One thing to consider is that even if you do require synchronization with an online system, let's say every month or every X transactions, this doesn't mean that the bank gets an immediate view of all the transactions, or that they get to see or hear all the transactions that have happened. So unless the history of the payment history that resulted in card A having a balance of X tokens, or a certain balance, is carried with every transaction. So if A pays B and B pays C, then C gets to hear about the initial transaction from A to B and stores it and eventually reports it back to the central bank when it needs to synchronize. The central bank will always have an incomplete, let's say, view of what is happening in the field. So this doesn't give you perfect security. That's why I'm saying that it's a bit of a, let's say, a false promise. Is if you say everyone will be forced to synchronize online, this doesn't mean that cards will not be lost, or let's say wallets will not be lost, destroyed, or actively prevented from connecting. So that means that you have to also consider how people get the wallets. So assign them to through KYC, assign them to individuals, so that that if they don't play by the rules, they cannot easily get another terminal to use and bypass the rules again. That's all.
Yeah, maybe I would say something about what has been told, even if I agree with most of the things that have been mentioned. When you go online, you choose what you want, what information you want to upload to the system. Many central banks, if not all, tell us we don't want to see the transaction for privacy reasons. So even if a transaction are uploaded, they will stay at the commercial bank level. And there are some ways to detect fraud, typically, as Lars mentioned. And again, we don't mandate it, but we recommend going online from time to time. But let's face the truth. Cash, is there going to be some attacks on digital cash? That's the basic question. First, will people be motivated to attack cash? I think asking the question is answering it. If you defraud it, you can create money, and if you're a criminal, you become a rich criminal. That's the first question, and I think everybody will agree that the answer is yes. Then the second question is it possible to defeat it, and how easy is it to defeat it? Lars mentioned, and I think you too, Razvan, that you rely on hardware security. So I could say that hardware security is terrible because you need to issue secure element, it's complex, it's not flexible. And we do the same. We do the same because we believe it's the only secure way to achieve digital cash. The software solutions, they are known already to be, there are some known attacks and not that costly. I mean, if you're interested, we have a technical white paper on the topic. DM me or go to the Idemia website. It details, it's quite technical, but it details the kind of attacks like you can have on software-based system. So you need to be very prudent on what you do. And the cost, the skills are pretty tough, but for organized crime, it's not a big deal. The cost is not huge. I was just preparing this call, looking on the web, how much it costs this kind of physical hardware attack devices. It's like less than $5,000. It's not a lot. So we need really to be prudent. What we recommend in our solution, you must have a secure element. To be more precise, the payer must have a secure element. The payee doesn't need to have one, but the payer must have one.
Jerome, taking another question from Pigeonhole. How can NFC payments be made at point-of-sale terminals without using MasterCard and Visa protocols? Let's take that one on.
I think you can do. There is already systems like that in India, for instance. They have their. You can put it on any card. You can put a dual service. There's one service is sort of Visa or MasterCard. And you can have a dual service where you have a preloaded balance. You have a value on that card, and that terminal could recognize that as well. That's commonly available already today in India.
It is also the same in Germany, where we have a national payment card scheme. And to my understanding, it works differently than MasterCard and Visa payments. So it's called GeoCard. And from our perspective at G&D, we've also developed a NFC payment protocol. And the only challenge there is to provide it on sufficiently many POS terminals, that implementation, because it is technically completely feasible to implement alternative payment schemes on those POS terminals. It's just that there's a lot of them out there. There's a lot of different payment terminals. So a key to CBDC adoption would also be to achieve a critical mass of merchant acceptance, right? So it doesn't really help you if all your users have NFC-enabled smart cards, smartphones, or whatever wallet devices they may have, when only a fraction of the merchants would have the upgraded POS terminals. So from that perspective, it is also crucial to see how well CBDC payment schemes can integrate or interoperate with existing EMV payment schemes in order to achieve higher adoption from that perspective.
I think, John, here we have the topic here is financial inclusion for CBDC and for offline payments for for financial inclusion and CBDCs, isn't it? And if you're really going to do something for financial inclusion and also digital inclusion, what we need to leverage is the telecom networks of the world. In many of the countries we are active, like India, only half of the population have access to internet. So I think if we're really going to help the world population, we need to look at how can we actually leverage the telecom network, because a lot of people simply are not on the internet today. So I think Razvan had an idea there that we can do remote payments as well. So and this is also true in Sweden. You know, we live in Ericsson land here. We have connectivity all the time. I saw handball, Denmark playing Egypt, 22,000 at the same place. No one got data. but you can use a telecom network. And that's important to have that redundancy route. So what you can do here, you can sign out the transaction, and instead of sending it in proximity to, say, a payment terminal, you send it up to the backend instead. That provides huge financial inclusion for a lot of those people who do not live in a sort of a bandwidth rich area, who doesn't even have it at all, but they could still be financially included here by having an offline payment capability. And then I mean offline in the sense that they do have telecom, which is actually the case for many people in India and Africa as well, but they don't have data. Here we have a solution that I think, come on, this is 2023. Why should a user care whether they're online or offline? This should just be automatically happening in the background, that if you don't get data channels, then route it via the telecom network. That is extremely important. And it will be the enabler for the billions of people that are currently not as fortunate as myself living in Sweden and Lars living in Munich, that have a lot of internet access around us.
Anybody else want to jump in on that one?
Just one note. I mean, I'm thinking that in these cases where you have like millions of people with no internet access, I'm thinking that they are quite unlikely to have smartphones as well. So if you base your solution on smartphones, unless they're using them just for voice and they bought expensive smartphones to just make voice calls, then I'm guessing in those areas there is a mass of people using old phones that will need to be catered to somehow.
I absolutely agree there. I think that we have to have different form factors. I think you all represent companies who deliver things on sort of cards, and we have wearables as well. And I think it was you, Razvan, who mentioned sort of feature phones. We should basically have a digital cash application running on a USIM. Absolutely. But I think what we can do with a smartphone, which I think is important, because when I started with digital payments sort of 3 years ago, the smartphone penetration of India was 50%. Now it's 80%. It's just gone 3 years. It's really going fast. And Latin America is already on smartphones. Africa is sort of lagging behind India, but it's coming. It's going to smartphones. And what you can use the smartphone for is not just as a means of payment, but it can also be a way to top up a card or a wearable in a complete offline mode. If just someone goes to an internet area and takes digital cash on their smartphone, implemented in software, I'm sorry, Jerome, I think it's still workable, and then you can top up a card. You don't have to, as Lars said, go to an agent or a kiosk. You top it up directly against the smartphone. Then you're getting a distribution system, which is just fantastic, again, for financial inclusion. You don't have to force them to go to a train station in order to top up their sort of card. You can do it on any sort of mobile. You debit that balance on that smartphone and you credit it on a card, and vice versa. You debit the card and you credit sort of one on the smartphone. That is why the smartphone is such a ubiquitous tool, not just for payments, but also for distributing digital cash.
Okay, I'm going to move on. I'm going to take the moderator's privilege here, and I've got some questions I'd like to ask you all. So I can start with Jerome. Your solution is based on secure elements, and are they really needed to prevent unauthorized money creation and double spending? And I guess and next to that question is, is it enough to be able to run the platform on a trusted execution environment within, say, a smartphone?
Again, unfortunately, the answer is yes. I mean, from all our analysis, and this is very documented. So again, I encourage people who are interested to reach out or to download our white paper to really go into the details, because I don't have the time nor the technical skills here to explain. But there are some known attacks. That's as simple as that. So trusted execution environment can be, there are a certain level of security, but if you want to do offline payments and offline retransfers, I pay you, you pay him, etc., you need a certain level of security. And I was seeing a question on the chat. There is no perfect security, as Lars was mentioning at the beginning. There is no perfect security, but the cost of hacking one device must be very high. Today, clearly on the state-of-the-art secure elements, typically what we issue in identity documents, in payment cards today. Today, there are no known attacks. But we know that if organized crime, if a rogue country, if an enemy country wants to destroy your cash system, want to create fake cash, that happened previously in history, if this could happen. So we need to have a very high level of security. And today, the only way to do it is through a secure element. So the secure element is more complex to use because you need to issue it, but it can be a SIM card. And I think almost everyone in the world today already has at least one SIM card. It can be a plastic card, a wearable. I mean, there are various ways to use it. And for the end user, they will use it as a smartphone, as a feature phone. They won't see the technical details. So there are many ways to do it, but we strongly believe and we demonstrate that hardware security is mandatory. Again, only for the payer, not necessarily for the pay.
Can I comment on that, John? Because as this is sort of a bit of a debate here, heating up between me and Jerome, which I think is fun. I absolutely agree on that. You definitely need a secure element. There's no doubt about that. If you on the payer side, absolutely. Where the debate is whether it has to be implemented in hardware. I think we're working with a Singaporean company called Viki that has common criteria, EIL 3+ sort of security certification, and FIPS 140. I think that's one or something that sort of protects the trusted application that we developed within their secure environment. They have developed their system on the premise of a hardware chip. So it is certainly possible. And we have to look at, security and convenience. If we're going to have CBDC really working in the world, we cannot just have it on hardware. That can't be the end goal of it. I think we have to get the security in place. And I think what we know, we have a lot of experience with this. It's not enough just to have that secure environment, because you can jailbreak a phone. You can do a full rollback on the phone. You can do a complete rollback, every single bit. So if you have a balance, you pay, and then you roll back sort of to the state that you were before payment. Yeah, you've created yourself some extra cash. But what you can do then is to create rules, because we can detect, because when you do a rollback, or no, sorry, when you're going to do a rollback like that, you sort of need to reboot your phone. So by putting in a constraint saying that every time you sort of rebooted your phone, then you have to go online. So we can, by some clever sort of design here, actually make a software-based secure element work for CBDCs and also real-time payment system. And that's what's needed. Otherwise, it will never scale. We can't just have it on hardware. Come on, this is 2023.
If I may try to find a synthesis between those two opposing views, because I don't actually think you have opposing views. And our opinion from our product perspective is also that there cannot be just hardware and there cannot be just software, right? You need to cover a broad range of different form factors. And I also love that paper that just came out from Lippis Advisors on the taxonomy, right? And when you say offline, right, it doesn't mean, just to clarify, I mean, Razvan also said it, when you say offline, it doesn't mean completely offline, completely disconnected from the grid. If you look at the mobile money payment schemes in, for example, in sub-Saharan Africa, those are sometimes branded as offline payments, but they do have 2G, right? So they need 2G connectivity to work. So what Joachim called it telecom, right? And when you look at fraud data from these systems, you will see that most of the fraud comes from social engineering. So it comes from phishing, it comes from impersonation and such things. And of course, that sort of indicates that there's no technical attack on these solutions, right? But it works on feature phones, and it doesn't need a smartphone, it doesn't need any sort of fancy technology. So from our perspective, we see first of all, the level of hardware or software security depends strongly on what a country would like to do, and also on the individual's risk appetite, because you will always have users who would prefer to have the strongest security possible, and then you have some users who would say, well, I'd rather have everything on my smartphone, my whole life is on my smartphone anyway, and I will be happy to just install a software wallet, right? So maybe just as a peace offering between those two opinions.
I think, John, I have a point here that, and thanks for pointing me in that direction, Lars, is that when the internet came about, it wasn't secure who's the sender is. So you needed sort of to secure basically the sender, who is sort of the payer. So you know, so you don't have an imposter there. But I think the way our technology works is that every single payment from a secure vault in software that you have on the smartphone, we have a signed transaction. And that could go, you know, uplink to the backend, and it can be verified there that there is an intent from the payer that he wants to pay, or it can go sideways, sort of in proximity to a merchant terminal, to a peer, or whatever, really. But I think here we are tightening the internet protocol as compared to when David Clark wrote his paper in 1988. Then that wasn't yet developed, but internet has evolved, and now there are the new internet protocol has that ability because they've seen spoofing and fraudster on internet. In the same way, we have our digital cash solution, not just looking at sort of how it was at DARPA in the 70s, but actually how the internet is set up today with secured integrity of whoever is paying. That's extremely important in order to get away from the imposters.
Okay, I don't want to prolongate this debate too much, but just to come back on what you said, Joachim, because we are in a way aligned on the analysis. You mentioned the EL3 plus level. Just without going into the details, it means a low resistance to attacks. So will the motivation of attackers be low, medium, or high? Okay.
I agree with that, Jerome, and that's why you need to complement. It's not enough with just a software-based secure element, because in an Android phone, as I said, you can do a complete rollback on a jailbroken phone. But if you add to that security measures, like you have to go online in case that has been rebooted, then you're adding that extra level of security, so you can have that right balance between convenience and security.
No offense, Joachim, but if you require your phone to be rebooted, I mean, to go online after a reboot, you know, a condition when, you know, a hurricane has hit your country and you have little power, I mean, that may be a deal breaker for some people to keep their phone on, because otherwise they'd have to go online when they don't have online connectivity for weeks.
You're right, but that might be the sacrifice that we have to do, and then they have to take it out maybe in an offline mode, to a complete offline mode, to put it on a card instead, as we talked about. Okay. So there are ways, but we can't design a perfect system here, but I believe that I think people in 2023 should have a convenience digital payment system. I really do think so. It should be private, it should be resilient, and it should be inclusive. That's what we need to develop. We should start with that, and not start with a lot of technology choices like it has to be in hardware. I think a lot of that hardware is coming from that they think it's going to be a centrally issued token that needs to be kept really secure. But perhaps it doesn't have to be that, as I described sort of earlier. Perhaps it doesn't have to go all the way. The other thing I really want to comment here on is sort of everybody is, you know, crypto is based on blockchain. Blockchain, I think, is a system which is great for crypto because the only thing you rely on is sort of the blockchain. You don't have a central bank, you don't have a bank. But why on earth should we have blockchain technology for central bank digital currency? The central bank is the most sort of trusted thing that there is. There's the whole countries behind it, for God's sake. We don't need a blockchain to guarantee sort of any payment. And the blockchain, that is set up, in my opinion, by design for surveillance. And I don't think we should allow systems right now to go out in a world which is having surveillance as its basic design criteria. We need something which by design has privacy, and then we should counter AML and tax evasion things by putting risk limits, as Lars and Jerome saying. We can't start with a system sort of which is built for surveillance. I don't think people would buy it. I don't think they should. We really believe in Crunchfish, in privacy for the people.
Okay, let's move on to another question. We've got, I'll pick from the pigeonhole this time. What governance mechanisms are in place to mainstream financial inclusion, especially among the poor? Who would like to take that on?
If I may. So there have been studies in the past that have demonstrated that in case of new payment instruments, the uptake of those payment instruments is greatly accelerated if welfare payments are being sent out through these payment mechanisms. So we see in some sub-Saharan African countries, for example, that welfare payments are being paid out through mobile money. So if you receive some kind of support money, maybe from your local government, maybe you are a small farmer and you receive subsidies, sometimes these are being paid out through mobile money. And obviously that creates an incentive for people to adopt mobile money. So what we see here is that underserved groups that may not be kind of commercially interesting to some of the private sector players, you see the government or the public sector stepping in order to incentivize the use of some payment product. And if you design your CBDC in a two-tier fashion, where the central bank does not directly distribute to end users, but instead goes through different institutions, we can onboard a lot more different financial intermediaries. For example, what's wrong with having a ministry for social affairs acting as an intermediary that could onboard users, especially poor users? So instead of having to having to go to a commercial bank and prove that you have credit worthiness and to prove all sorts of things proving income, why not go through that to that ministry directly and obtain your wallet or obtain your CBDC? So we believe here that technology can actually help to set the right incentives in order to incentivize financial inclusion, and to still have that balance between private sector and public sector, so that the public sector can set the incentives, whereas the private sector may supply the additional services to the economy and society.
Anyone else want to step in on that one? No? Okay, I'm going to combine two pigeonhole questions here. First of all, so it works offline. Does it eventually need to go online to apply the transaction? So, and then I want to combine that with how important it is for an offline CBDC device to connect to the central system for reconciliation and to counter the counterfeit and double spending. I know some of you some have answered this in various ways already, but and any further thoughts on those two questions?
I can take that one. It really depends on the characteristic of the system. Today, cash can be retransferred. I mean, you have an instant finality. When I give you cash, instantly you have the money. You don't need, when I pay you with a credit card, you need to go to the bank in order to have the money. You need to defund in a way. It's not exactly defunding. When with cash, you have an immediate finality. You can spend the money immediately. It depends on the design of your CBDC system. We recommend in our system to emulate cash, so to have an instant transfer of value without the need to go online. This is why the system, in theory, could go online. And I think I already mentioned that, but for the question of how often do you need to go online, I like to compare it with cars. Technically, you could have no speed limit downtown. Technically, cars can do that. If you want to drive 130 kilometers per hour downtown, technically you can do it. But by law, there are some regulations for security reasons. Here, going online, I think it has to do with security. It has to do with traceability, and traceability has to do with privacy. So it's the answer will differ country by country. Total traceability, no traceability, some bit of traceability. So security, traceability, customer service. So there are some reasons why you would want to go online from time to time. You have also this overflow mechanism. So most of the CBDC will limit the maximum balance that you can own. What happens if you go over it? So if it's 1,000, I have 900, you give me 200, what happens? I cannot go above 1,000. Should I reject the transaction, or should I accept it, but it goes in an overflow account but I cannot spend because my CBDC amount is limited. And then this overflow account, I need to defund it. And in order to defund it, I need to go online. So for all these different reasons, I think it makes sense to go online from time to time. Again, it's not a must, but I think it makes sense.
I also agree with Jerome there. I think there are you can put risk limits on the offline wallet on how it needs to behave. I think that a lot of central banks, they already have rules for how they treat cash in a country. You know, if anyone should be able to do reasonable amounts, transaction with reasonable amounts with complete privacy. But obviously, if you're going to do you can't walk into a bank and say, I just have $100,000 here in cash and I want to deposit that. Then there are already rules set up for the central bank that the bank is obliged to ask questions about that. And in the similar way, we can create that same framework for digital cash as well. It doesn't have to be reinvented. I think it just has to be applied for digital cash, what we already have in place for cash. The same freedom that we have for cash, where we can have the freedom of paying in privacy, the freedom of a sort of not having to care if you're online, offline, all these things should just be completely just translated into the digital cash world. And it's possible with technology. It's not really hard. I think we can do it.
Just one note here. You can also have a mix of the two. So the fact that you operate offline doesn't mean that the rules cannot be changed or people cannot have different rules. So the way that we've approached it is by having a separate application on the same wallet or on the same card that acts as the representative of the bank. We call it the policy enforcer, and it has a set of rules on what is allowed for you as a user. It may be different than everyone else's. So you may have different user tiers with different access rights. And again, in terms of when does it need to connect online, it really depends on what you're doing. So for instance, the policy enforcer can say, you've done 1,000 transactions this month, so you usually do about 100 transactions, and that's specific to you. So it may detect unusual patterns of usage on the user's card, on the wallet directly, and it may require you to go online when you're doing something unusual or something that is suspicious. But that definition of suspicious is something that the central bank and the government can load onto your card. So they may change their position in the future. They may start first, or they can, let's say, upgrade your abilities. So you may start with no KYC, $500 limit, and then you may go to full KYC, let's say $3,000 or 3,000 euros limit on your card. And so that has to be, in our opinion, that has to be separate from the application itself. So the offline cash is cash, but as opposed to the paper cash that you can just give to anyone without leaving any trace, you can have a system that doesn't report you to the central bank, just prevents you from doing certain things. So it may say no to certain transactions that are suspicious at the time that they are executed, or like Jerome said, it can move some of the funds to a holding account, let's call it, or overflow account, not necessarily because you've exceeded some limit, but because it thinks that those transactions are somehow suspicious. And then at a later time, you have to go to the central bank and report those, or get that overflow account deposited into your online account.
So maybe just one more elaboration on that point, on those tiers, right? Those different levels of limits. Maybe we also already see that in mobile money. So when you sign up for a mobile money account, you get a normal user account, and that means a particular fee structure and a particular limit structure. However, if you go to your mobile money agent and you show your business registration, you get upgraded to a merchant account, which means that you suddenly now have higher limits, you have a different fee structure, but also you lose some of your privacy, because now you suddenly have higher regulations in terms of how you need to report your transactions. And my personal feeling is, if you're acting as a merchant, that is totally acceptable, because you need to be taxed, right? So it could even be the case that your wallet application already keeps, I don't know, 5% in sales tax or something like that. And that way you can simultaneously allow privacy for end users, but also still traceability and taxability for merchants who would have a higher, let's say, inflow of money, right?
Okay. Razvan just told us how WhisperCash enforces AML CFT regulations while offline. Perhaps the others would like to jump in and just describe briefly how their platforms enforce AML CFT while offline.
Counterfeiting is sort of done by basically that you do have, as Jerome and Lars, I guess, are talking about, you need a secure element for sure. So and it has to be tamper resistant. So it's hard to just do any sort of copying cash in any illegitimate ways. Anti-money laundering, that would need to be set up by risk limits, what you can do. I believe in, just like internet, that you can be a user on the internet with a complete anonymously. You just have an alias. But that means that you have just not really onboarded you in a serious way with a bank, and you have serious risk limits of what you can do with that wallet. But you can be private. You can pay up to the limit that privacy, that the country allows privacy, just like with physical cash. But going above that, then there's probably could be levels, but otherwise it's full KYC, and then that is a way to be able to, at least at the bank level, see that transaction, what is sort of happening. So I think it's AML is sort of very much countered by risk limits applied to the trusted application running within the secure elements, and that is also the area where you take care of this counterfeiting as well.
And it's quite interesting to go through the thought process of our friends at the European Central Bank, the ECB, on that topic. They are exploring making offline payments totally anonymous, meaning that, okay, there may be some AML issues, maybe on offline, because it's a little bit the emulation of cash. Cash today is totally anonymous and traceable, so there is no AML on cash, but it's very limited in amount. It's only proximity payments. And the forked process of the ECB is telling that offline will be low amounts, it will be limited, it will be proximity payments. So there would be kind of grandfathering clause. Today you have cash, with digital cash, you continue to have this privilege in a way to do a totally anonymous transaction, not traced in AML CFT. So that's an interesting approach, and personally, I believe we'll see more of this.
I've got a question specifically for Joachim here. I hear that Crunchfish is trialing digital cash with the Central Bank of Nigeria, and they're one of the biggest countries that has actually has launched and piloted a CBDC. How is Crunchfish digital cash augmenting the Naira in Nigeria?
What they have a system in the back end. They've gone for a token-based approach. So they issue sort of a centralized token. I think they're running on the BIT platform, so it's a token-based approach. But they need to get offline into it really. And the key problem, as we talked about, is sort of double spending. How to solve that, and then you can't wait for the to check it online as sort of cryptos are doing it, because crypto are just online payment systems. So what we put in here is a non-native layer 2 solution where we're sort of exchanging out a balance. You can do it in different ways, but you put a hold on some money that you have online. We never actually move any CBDC offline. It still stays online, but we get a spending limit that we have on individual sort of wallets, and then we transact outside the chain. I think they have blockchain there, so outside the chain, and then we can put it back again. And it's important because the key thing for, as I said, digital payment is a public good. We can't just wait until everybody got internet connectivity until they actually get access to such a basic fundamental right to pay digitally. We need to provide for service connectivity, and that can be provided much earlier if you allow a system to have the resilience that it doesn't matter if the payer is online or not. And what they see here in Nigeria is that they want it for initially here all the smartphone users, but they are certainly talking about that a big part of the Nigerian population is it doesn't even have a smartphone, so it needs to work sort of on card, wearables, and feature phones as well. That needs to be catered for as well. But I think they start with adding offline capabilities in a non-native layer 2 type of fashion on sort of smartphone. That's sort of what we are doing in a proof of concept with them, and it's certainly interesting because Nigeria, I think apart from China, is the only country in Africa which has launched a CBDC. They have millions of users already. China has also launched, and they have probably even more, but there are more Chinese than Nigerians on the other hand. But I think otherwise they are number 2 in the world when it comes to CBDC implementation. So we think it's great that we are part of that implementation right now with our Crunchfish Digital Cash. You're mute, John.
Yeah, I'm on now. I'll say one more question here for everyone. This is a bit of a zinger here. So I think the meaning of this question is, has anybody thought about testing their solution with a security bug bounty program with a big reward like $1 million? If not, then how will it be tested before going into production? How do we really acid test it?
We run ours through pen testing. We as people may be aware that we are in the regulatory sandbox in India, and India for sure, you know, it's the dominant country in the world when it comes to real-time payments. I think the increase of digital payments or real-time payments last year, they went from something like 35 billion transactions to 100. That increase is more than the rest of the world does in total. When it comes to real-time payments. So India is so much dominant here. And we are working with the largest bank in India, and to actually put digital cash with digital money then. It doesn't have to be the CBDC. We're doing it there, and it's in the regulatory sandbox of RBI in India. And they would never have allowed us to go live without pen testing. So they have done pen testing. We have done pen testing. So that's been done. I like the idea because I rather pay probably $1 million in order if someone can crack it before actually sending it out in a country and then be exposed later. So I think it's a nice challenge. Let me think about that.
Others?
Yeah, I think the big bounty is interesting. It's not what we do usually in our industry, but again, why not? I don't see a good reason why that wouldn't be the case. Today, the systems are evaluated by independent penetration test laboratories. There are some methodologies available. You need an authority to define what has to be tested, what are the rules, like what we call a security target to define what needs to be evaluated. Today is still a bit early. Something I believe nobody mentioned is that today, in real life, nobody is actually paying. A population is not paying on a large scale with offline CBDC. It's too early. Maybe in China, it's not very clear. So when deployments will come, I expect the central bank to define a level of security that needs to be achieved with accredited laboratories for penetration testing. And in order to deploy your product, you will need to pass these stringent tests. So this is the way it's done usually. Bug bounty can be a good idea too.
And you have to keep in mind that, so sorry, go ahead.
Yeah, so I agree with what has been said so far. We also see a challenge that the regulators still have to catch up to some extent, because if you look at, or if you ask different countries, if you ask their cybersecurity institutes, if you ask their regulators, how would we actually define those security targets for CBDC? Most of them don't have a clear answer yet. So whenever we do, I mean, we also do pen testing, obviously. We also employ some security engineering practices. The core of our solution actually is covered partly by EAL7 levels. And the problem is here that for some of the things, we just have to look at what is currently out there in regulation in security targets and try to make sense of that and to apply it to CBDC, because right now there is no large scale token-based payment instrument, right? So we can look at, for example, how could we apply PCI standards, how could we apply other types of standards for payment card, payment schemes to CBDC. And I would invite all the regulators, all the security bodies, government bodies to engage in a conversation how to future-proof those regulations so that we can be more confident when we are thinking about rolling out CBDC on a national scale or on an international scale. And we have more clarity on what needs to be protected and how it's supposed to be protected.
Razvan, last word.
I was just wanting to say, I mean, I kind of disagree with what was said here. So a bug bounty of $1 million will probably not protect you against someone like a nation level attack, because if we're dealing with an attacker that is trying to compromise, let's say, the digital euro or digital dollar, I think they will not be interested in making a quick $1 million, and they will just, so if anyone finds a weakness in such a system, they have to choose between making $1 million now or making billions of dollars later when the system is launched. So I think at this scale, offering a bug bounty will probably not do much. I mean, even if someone finds a vulnerability, I think they're very unlikely to report it to you, even for $1 million. I mean, if it's North Korea attacking that system, I doubt that they'll just go for the $1 million that you're offering instead of keeping that to themselves. So that's just my opinion. And also the fact, I mean, I agree with Jerome. So the usual process is that you get this audited by a trusted lab or trusted third party that looks not only at the system as a black box, so they don't just treat it as a box that they need to probe with lasers and stuff. They also look at implementation details. They look at the sources. So they look at a lot of things that are not normally available to the, let's say, to the general public, but they may be able to find things before they become a problem. So that's something that you do not get when you just put it out on the internet and say, okay, I'm offering $1 million to whoever can break this.
I think, John, here that breaking the system it's a question of what you break, and that's all about how the system is designed. I believe, and I'm a warm proponent for an account-based online payment rail. We certainly can work with, as you heard in Nigeria as well, with a token-based. That's okay. But if you have an account-based sort of back-end rail, have been in place for I don't know how many years, 50 years, and that's sort of, there are the security protocols for that. That's not really a big issue. Then our digital cash solution is actually the only thing that I think any central bank needs, because you don't need anything else. If you run on the account-based rails, then we take care of the rest to have that layer 2 non-native tokens that actually provides the retail layer of CBDC what they need. And here the security is wallet by wallet. You don't crack the entire digital euro. You just crack one wallet. That's the beauty of designing. You get security by design instead of having tokens issued centrally and have them walk away all the way down to the sort of front-end devices. I don't believe in that. I believe we should have security by design by having non-native tokens, just like we withdraw cash. There's a lot of similarities of how cash works that can be brought into here, the digital world. That's what we should do. The only thing we shouldn't do with cash is to implement the banknote as a digital token. That's the big mistake, in my opinion.
Thanks, Joachim. And that brings the session to an end. We ran a little bit over time, but I suspect that looking at the questions and the discussion here, we could probably keep going for another half an hour or more. But I'd like to thank the panelists for their insightful comments and responded to questions. And also I'd like to thank the audience to I think they've peppered us with some interesting comments and questions. I'm sorry that perhaps we didn't get to all of them. Some of them there are some interesting comments I noticed taking place in the Q&As and the chat box, and that hopefully those will be saved perhaps so that we can all view them after the session closes. But after this, the next session is going to be at 2 p.m. Central European time, and that's going to be on scalability and security architecture for crypto. And then also invite you all to come in later at 4 p.m. CET, where we're going to have a deep dive session on a couple of different of the different platforms. I think it's Visa and Idemia. We're going to hear some deep dives into their offline perspectives. So thank you for that. Hope to see you again soon.
Thank you, John.
Thank you.
Bye, John. Bye-bye.